Welcome back to the show. Today's episode is packed. We're starting with the latest prices for Bitcoin, Ethereum, and XRP, breaking down the numbers and what's really driving the moves. Then we'll dig into Bitcoin's resilience after fresh ETF outflows, Ethereum's tightening supply and deflationary pressure, and XRP's continued breakout momentum now that it's back above the $3 mark. We'll also cover the altcoin rotation that's lifting names like Stellar, Litecoin, and Ondo Finance. We'll examine what's going on behind the scenes with whales, what Tether's latest minting surge means for the markets, and which regulatory stories are moving the narrative this week. Finally, we'll wrap with the 3 key price levels traders are watching into tomorrow, and what could trigger the next breakout or breakdown. Let's kick off with the latest prices. Bitcoin is trading at around $115,593, up about 0.13% in the last 24 hours. Ethereum is sitting near $3,710.90, up roughly 0.6%. XRP is pushing $3.09, a strong move, gaining nearly 5.8% since yesterday. Solana is trading at $181.44, up 3.3%. Dogecoin is currently 22 cents, gaining around 4.7%. Stellar Lumens is at 42 cents, up 2.4%. Cardano is priced at 78 cents, up 3.67%. Avalanche is sitting near $24.75. Chainlink is $17.82, up 1.9%. Hedera is trading at 26 cents. Litecoin is around $120, up 7.1%. Ondo Finance is trading at 93 cents. Now let's unpack what's behind those numbers. Bitcoin held firm at around $114,000 to $115,000, despite a fresh wave of ETF outflows. Day traders and institutions withdrew approximately $223 million from spot Bitcoin ETFs, marking the first real outflow since a long streak of inflows. On the surface, that may look bearish, but Bitcoin's price stability suggests deeper conviction under the surface. One key sign: the U.S. Strategic Bitcoin Reserve remains intact. The government, under executive orders earlier this year, holds an estimated 200,000 bitcoins. It's a strategic stash, tied to national policy, not trading desks. And that backdrop appears to support sentiment even when retail money reverses. Meanwhile, accumulation is quietly resuming. Large wallets linked to over-the-counter desks and institutional buyers are steadily stacking higher. Metaplanet in Japan, for instance, added over $53 million of Bitcoin in the past week, and their total holdings now exceed $200 million. It's not headline news, but those transactions matter. On the derivatives front, roughly $164 million in Bitcoin long positions were liquidated. That kind of shakeout often happens before major moves. Weak hands get flushed out. What remains are holders and institutions waiting for the next clear catalyst. Ethereum is trading near $3,710. That is about a 3% rise, though it came at the cost of over $260 million in liquidations on long positions. The bull push is real, but also contested. Ethereum is testing critical resistance between $3,600 and $3,800. If it breaks and holds, analysts expect a run toward $4,000 this month. If it fails, a drop back toward $3,300 could play out. The encouraging sign here is that Ethereum is decoupling from equities, trading more on asset-specific fundamentals like network usage, staking flows, and protocol upgrades. Staking continues to tighten supply. There are now over 28 million coins locked across staking platforms and Ethereum's beacon chain. Many tokens are slashed into staking contracts, especially liquid platforms like Lido. And the protocol's burn mechanism continues to remove coins permanently. That creates a deflationary dynamic that traders are watching closely. XRP is trading at $3.09, resistance cleared and momentum building. Over the past 24 hours, XRP rose nearly 5%. The technical signal is a breakout from a falling wedge pattern, with a reclaim above the key resistance near $3.03. Net inflow over the last day was positive, around $8 million, showing institutional interest. XRP's support lies at roughly $2.85 and $2.75. If it holds those levels, traders will be watching for a push toward $3.25 and possibly beyond. Some bullish models suggest a move to $3.67, even to $4 before the end of August, particularly if a spot ETF launches soon. Two key drivers are in play: real regulatory clarity in the United States and expanding on-chain utility. A U.S. court ruled last year that XRP traded on open exchanges is not a security, a legal green light that few other tokens enjoy. Ripple is advancing payment corridors with banks across Asia and Latin America. These are live systems, not promises. Institutions are quietly integrating XRP into cross-border rails. It is utility unfolding. Beyond those three assets, the broader market shows interesting momentum. PayFi tokens led gains, up roughly 8%. That includes Litecoin, which surged 11% after a mobile payments deal in Southeast Asia, and Stellar, which sees renewed interest amid African telecom stablecoin use cases. Another coin to rise today was Litecoin, which jumped over 7% to trade at approximately $120, stirring spec rumors about an upcoming Litecoin ETF. Once again, altcoins tied to payment rails are outperforming in this environment. Real-world asset tokenization is also gaining traction. Protocols like Ondo Finance saw a breakout. Ondo traded near 93 cents with volume twice the average and largely bullish sentiment on the back of recent acquisitions and U.S. regulatory approvals. Analysts suggest Ondo's tokenized U.S. Treasury yield product is positioning for explosive growth this August. Tokenized treasuries, real estate, and equities are quietly attracting institutional dollars. Matrix Stock and Ondo are now representing hundreds of millions in on-chain RWA. It is the less flashy, more foundational side of crypto adoption. Decentralized finance overall remains steady. Total value locked is flat around $56 billion. Activity is picking up in blue-chip platforms like Aave, MakerDAO, and Curve, while experimentation in newer chains has slowed. Traders appear to be seeking safety in trusted protocols while staying alert for DeFi catalyst events. Non-fungible tokens remain subdued. Volumes on OpenSea, Blur, and Magic Eden declined slightly. Ethereum collections like Bored Ape and Pudgy Penguins saw floor prices slip 1 to 3%. Bitcoin ordinals have flattened. DraftKings' NFT-based fantasy sports platform did see a 6% uptick in user engagement, however. It's a niche bright spot in a broader cooldown. Crypto sentiment indicators show mixed but improving signals. The Crypto Fear and Greed Index sits at 59, leaning bullish. Social chatter around Bitcoin and Ethereum is increasing while scam-related discussions are declining. Yet Google Trends data shows crypto searches declining 10% week over week, suggesting public interest remains cautious unless big breakouts happen soon. Regulatory developments remain live. In the United Kingdom, former Chancellor George Osborne warned that the UK is falling behind in crypto adoption, missing out on stablecoins and ETF access that other regions like the US, Hong Kong, and Singapore are rapidly embracing. The Financial Conduct Authority has now hired a senior payments executive from Standard Chartered, signaling an intent to catch up. But the debate is ongoing. In the United States, stablecoin regulation via the Genius Act is being expanded. Legislators are discussing whether to include algorithmic stablecoins under the same strict reserve and transparency rules, a major shift given past failures, like Terra Luna. Separately, proposals for a Senate Crypto Oversight Subcommittee are gaining traction, aiming to centralize regulatory authority across agencies. In Asia, CoinDCX, one of India's largest crypto exchanges, resumed withdrawals following a $44 million hack, but the CEO emphasized that no user funds were lost, and operations are fully restored. That's a reassuring step as Indian regulators consider regulatory reforms that may reclassify some tokens as securities, potentially affecting user onboarding and tax treatment. On the institutional front, crypto firm Bullish filed for a US IPO, seeking to raise up to $629 million. That would value the company at over $4 billion. The listing is intended to expand its footprint in the growing compliant crypto-backed brokerage space. Elsewhere, news broke that cryptocurrency billionaire Justin Sun just completed his long-awaited Blue Origin spaceflight, a 10-minute trip in New Shepard, bringing high-profile attention back to the crypto world's eccentric billionaire class and their intersection with big tech. Let's close with what matters most for traders going into the next day or two. For Bitcoin, watch whether it can break above $115,000 and then move into the $118,000 resistance zone. A clear close above that would invite higher targets and potentially trigger short squeezes. Ethereum must take out the $3,600 band to reassert a bullish trajectory. If it does, expect a glide toward $4,000. If not, the steps down become real. And XRP's fight at $3.09 and above is crucial. Holding above $3.05 opens up runway toward $3.25 and possibly beyond if momentum sustains. A drop below $2.85 could roll back the bounce. Across the board, watch stablecoin issuance. Tether minted over 1 billion new tokens in the last 3 days, mostly on Tron and Ethereum. That is an indicator of growing exchange liquidity and potentially incoming capital flow. But timing relative to actual trading is key. Crypto is not just price action. It is liquidity, regulation, adoption, and tech. And those are all evolving at pace right now. Thank you for joining today's update. Make sure to follow or subscribe if you found value. We deliver this briefing daily, so you never miss the moves crossing charts and headlines. We'll be back tomorrow with fresh insights, strategy context, and the forces shaping these markets. Until then, stay sharp, stay curious, and stay focused. And as always, we will see you at the top.